This is Nightly Business Report with Tyler Matheson and Susie Gehring.
Make it 3 straight all-time highs for the Dow, fueled today by optimism in the job market.
How's the consumer feeling these days? We'll find out as we go in focus on the American recovery. And I'll ask the CEO of General Motors if people are still in the mood to buy.
And the threat of hackers is endangering a critical part of America's economic engine, small business, and that could lead to even bigger problems. Hello, everyone, and we welcome public television viewers from all across the country to Nightly Business Report. Thank you very much for joining us. Susie, today it was all about jobs.
It sure was, Tyler, and that's where we begin tonight with encouraging news about jobs. That news gave a boost to the markets and led the Dow to another all-time closing high. The blue chips rose 33 points, the NASDAQ added 9, and by gaining nearly 3 points, the S&P 500 is now within 20 points of its all-time closing high. One day ahead of the Labor Department's February jobs report, we learned that first-time jobless claims fell by 7,000 last week, dipping to a 6-week low and surprising economists who expected actually a jump in claims. This comes a day after payroll firm ADP reported a much better than expected gain in private sector payrolls in the month of February, an increase of 198,000 jobs. Here's Hampton Pearson with a closer look at whether that encouraging data points to a better jobs market.
In the nation's capital today, a sure sign of spring and perhaps an improving job market. A sightseeing tour company looking to fill 150 vacancies hosted a jobs fair with lots of eager applicants.
I have a lot of experience. I'm well qualified for this line of work, and I've got a good set of references, too.
While the drop in weekly jobless claims and increased private sector job growth is encouraging, it's those higher taxes and deeper spending cuts from Washington that could slow down the job growth momentum. Healthcare has been the biggest job growth engine, up 320,000 in the last year. Construction is on the rebound, adding 28,000 workers in January, the 4th straight month of big gains. In contrast, government workers continue to lose jobs, particularly at the state and local level, down by 24,000 just in the last 3 months. And layoffs are on the rise, up 55,000 last month, according to consultants at Challenger Gray and Christmas, the 2nd straight monthly increase. The trade deficit topped $44 billion in January due to more imports, $6 billion higher than December, and a possible drag on economic growth in the first quarter, with a downside ripple effect, economists say, on job growth in the coming months.
We're going to have a second quarter dip in employment, not a decline in employment, just a slowdown in the pace of employment in the second quarter of the year, bring it back down below 150,000 workers per month.
So tomorrow, when we get the jobs report here at the Labor Department, economists predict we probably added about 160,000 jobs to payrolls last month, just enough to keep the unemployment rate at around 7.9%. For Nightly Business Report, I'm Hampton Pearson.
All right, let's dig a little deeper into the labor market as we look ahead to tomorrow's number with Diane Swank, Chief Economist and Senior Managing Director at Mesereau Financial. Diane, always good to see you.
You too.
You just heard Hampton put his numbers on what the probability is for tomorrow, about 165,000 jobs and about a 7.9% unemployment rate. Where are you? What's your forecast?
Well, certainly I was there in the beginning of the week, but I think with the preliminary jobs numbers we saw from ADP and some of the consumer numbers that we've seen come out, the consumer confidence numbers, which across the board have shown people more optimistic about the labor market in the month of February, I think we could easily get closer to 200,000 and be surprised pleasantly on the upside for a change, which would be welcome news at this stage of the game.
But, Diane, there's still a lot of pain in this job market. There are 12 million Americans who are out of work. These are the long-term unemployed. And if you look at that measure of the U6, I think they call it, 15% is the unemployment rate. Teen unemployment higher than that. CEOs we talk to really not in the mood to hire. So what can you tell Americans about the health of the job market?
Well, what we're seeing is it improve, although the threshold is easy to clear because it's been so lousy for so long. And what we're talking about is still a very long slug going forward. And I think the intro is really important because what we're looking at is what could be a turning point in the job market where we see much more measurable increases in employment and a whittling away of the unemployment rate that could, though, be derailed by what's going on in Washington right now, particularly in the second quarter. Much of the furloughs and layoffs are likely to hit in the month of April, which we won't see in the jobs numbers until they're reported in early May.
And yet government payrolls are going down, even as private payrolls are going up. One area that I'd like to hear your thoughts on is incomes. You know, we've got some job growth in the economy, but we have very, very tepid income growth. Why isn't anybody getting a raise?
You know, that's because one of the ongoing slack in the labor market, you got a lot of competition for jobs out there. You've got a lot of people willing to take any job you've got, but also there's been a shift in the composition of where we hire. We're seeing in the healthcare industry, for instance, although hiring is still very robust, they're cutting nurses' wages and substituting, in many cases, high-paid nurses for lower-paid tech personnel who have an 18-month degree. They're paid better than other people with an 18-month degree, but much lower, of course, than nurses. And so you're seeing a lot of shifting going on where high-paid personnel are often traded off for lower paid personnel, even in the healthcare sector, which has been the job generator and one of the bright spots in the overall labor market for some time. The good news is we do have construction coming back. Those are high paid jobs, and manufacturing, but not in the volumes we saw, of course, during the height of the housing market boom or in the manufacturing sector of what we saw in the past.
All right, and anything that you can say about small business versus big business? We did see in the ADP report that small businesses continue to hire, but what about bigger companies?
You know, that's really important is the small business in the ADP report, because it's a payroll service company, tends to catch new business formation as well, which isn't always captured in the government survey until later. So that is actually encouraging news that there might be more business formation out there than we're actually capturing in the official data, and we'll get it on later revision. So that's good news. The bad news is what you heard on the Challenger report, that not all big companies are hiring, and that's where the hesitancy has been at the large corporations.
Diane Swank of Mesereau. We'll find out the numbers tomorrow. Thanks for being with us.
Thanks, Tyler.
One area that continues to hire still is healthcare, despite what Diane just told us. And as Jane Wells tells us, one unique sliver of that sector is really booming.
Just set it right here, honey.
88-year-old Lorraine Irvine has been able to age gracefully in her own home with help from caregiver Victoria Lomelli.
I couldn't live without her.
92-year-old Dorothy Sable has hired so-called granny nanny Sydney Kaplan to take her on errands.
She's so likable.
As America grows older, a growing trend is senior home care, a service not covered by Medicare, but one that more Americans are able to pay for out of pocket or with long-term care insurance. Business is booming.
This year we'll do about 15 million. We service currently between Louisiana and California about 600 clients every day.
Are you hiring?
We're hiring every day. It's our biggest challenge.
Jake Fackrell started Alta Home Care and is hiring as many as 20 people a week, though most applicants are rejected. This is hard work.
It's very important to watch your attitude when you're changing an empty in the bag.
The average pay is $10 an hour. And it's estimated that 4,000 caregivers and certified nursing assistants are being hired every month in this country.
The senior care industry just for senior home care has grown by more than 40% in the last 5 years.
I love being with the seniors, learning from them, being around them. I love their energy, even when they're cantankerous.
Granny nanny Sydney Kaplan charges $60 an hour. She's a former reality TV producer with a degree in therapeutic recreation who saw a need at the high end.
They want to be seen with someone that's a professional and that looks like a member of the family.
And with 40 million Americans at least 65 years old, as they grow older, business will grow with them. For Nightly Business Report, Jane Wells, Los Angeles.
Another positive on the economic front, a lot more of us are seeing growth in our net worths. The Federal Reserve reports that as of the final quarter of last year, Americans had gained back just about all of the $16 trillion in household wealth, yes, trillion, lost in the Great Recession. Americans' net worth now totals $66 trillion, and it rose $1.2 trillion from the third quarter of 2012, with much of that rise coming from higher stock prices.
Well, one stock contributing to that wealth effect for American households, Google. Shares of the search giant have now overtaken tech rival Apple to become the most owned stock by the 50 biggest U.S. stock mutual funds. And it's not hard to see why. When we look at both companies over the past year, in sync most of the way, then just around December, Google takes off and Apple heads south. For the year, Google is up 37%, while Apple is off almost 19%.
Well, with the S&P 500 index approaching an all-time high, we kick off our market focus tonight with another S&P milestone. Standard & Poor's reports that the annual indicated dividend rate for its S&P 500 listed companies has reached $300 billion for the first time ever. Last year, S&P 500 companies paid out $281.5 billion in dividends. 406 of the S&P 500 are now paying dividends, and that is the greatest number since 1999. Well, adding to that dividend pot, Colgate-Palmolive's board upped its dividend 10% today and set a 2-for-1 stock split going to take effect April 23rd. Shares are up 24% over the past year.
Here's the latest on that Macy's JCPenney tug of war. The judge ordered mediation for Macy's and JCPenney over the high-stakes lawsuit over Martha Stewart's contracts with both companies, telling both sides we live in a free market society and the business people involved need to work out a solution. He gave the parties until April 8th to settle. And Kroger shares moving higher today thanks to better than expected quarterly earnings at the supermarket chain, up 22% in the fourth quarter to 86 cents a share. That's way above the 70 cents that Wall Street expected. The company's forecast for its fiscal year also came in above estimates. Kroger shares rose 3% and touched a new 52-week high during the day.
Susie, Boeing's 787 Dreamliner is going to remain on the ground at least several weeks longer. Federal aviation investigators say they have reached no conclusions about the cause of a battery fire on board one of the jets in Boston. That was back in January, as you probably recall. The NTSB now plans to hold both a public forum and an investigative hearing in April to focus on the design of that troubled lithium-ion battery system. Now, despite that, shares of Boeing were the biggest gainers in the Dow today, touching a new 52-week high for that company and closing up more than 2%.
Another financial blow to BP in the wake of that massive oil spill in the Gulf of Mexico back in 2010. A federal court in New Orleans ordered the oil giant to pay out even more money to more parties than the $20 billion in compensation and cleanup that it was expecting to spend. BP says it'll appeal the ruling.
And coming up, we're going to talk with GM CEO about who's buying cars today and the company's commitment to helping Detroit get back on its feet. But first, let's see how the overseas markets closed today. Some of the nation's biggest retailers reported only modest sales gains last month, which rose by an average of 1.7%. And that brings us to the fourth in our special week-long series called In Focus, The American Recovery. Tonight, we look at consumer spending and the pressures keeping a lid on it.
Higher payroll taxes and rising gasoline prices continue to streak across the headlines with good reason. These headwinds appear at the very least to be impacting how much consumers are buying.
These things will take dollars out of consumers' pockets. It's disproportionate for low earners, and I think that it's reasonable to expect some moderation in that consumer demographic going forward.
Walmart is certainly feeling the pressure. The world's largest retailer, catering largely to lower-income consumers, blamed a delay in tax refunds for its slow February sales start.
It does put a lot more pressure on March. February is a smaller spending month than March from a U.S. consumer's perspective. So that's something that we'll be watching very, very closely.
While consumer confidence rebounded in February, executives from Target, Abercrombie & Fitch, and Lowe's are also expressing concern about continued consumer uncertainty, though not everyone thinks retailers should worry too much.
I don't think there's this new normal. Obviously, if paychecks are lower, there is going to be some reduction. But I believe over time, if that's the only factor, I think consumers are going to adjust, and I think that consumer spending is going to stabilize.
But higher payroll taxes aren't the only headwind. The average price for regular unleaded gasoline has increased 40 cents per gallon, or 12% in just 3 months. According to Barclays analyst Bob Durbel, a 10-cent increase in prices at the pump takes away an additional $100 to $110 from consumers' disposable income, or as much as a $13.8 billion drain on total consumer spending in other areas. Because of the current pressures, it appears lower-income Americans are on the sidelines of the American recovery. But then again, American consumerism often prevails, even in times of economic hardship. For Nightly Business Report, I'm Courtney Reagan.
The spending habits of the American consumer is also important for U.S. automakers. I talked recently with General Motors CEO Dan Akerson and asked him if consumers are still in the mood to buy cars.
If you go back to the bottom of the economic crisis when consumer confidence was at decade low levels, today consumer confidence is up. And in fact, the average rate of purchase of cars, automobiles, crossovers, and trucks in the U.S. in the 08-09 timeframe dropped down to 9 and 10 million units. It's currently at 15 to 15 and a half, which is indicative of, I think, greater confidence.
But Mr. Akerson, as you know very well, consumers are coping with a lot of issues. Skimpier paychecks, high prices at the pump, all that dysfunction in Washington. At what point, how much is too much before consumers just close up their wallets?
The dysfunction that you described, the inability to come to common ground and articulate a vision of how to proceed in our country, I think creates a certain degree of uncertainty that if it continues, if we have these every 60 to 90 day crises, I think that will erode confidence.
Well, dealing with what's going on in Washington is not much you can have control over, but looking at GM's own situation, I see that the market share has slipped a little bit in the U.S. What can you do about that?
To give you an idea, 70% of our 4 brands, 70% of the models this year will either be refreshed or brand new. And that's representative of the 4th year since bankruptcy and an investment on the order of $8 billion a year in new product development, and the launching of new models this year will completely revamp. We're going to go from having the oldest portfolio in the industry to having one of the freshest portfolios in the industry by the end of this year.
And we know that China is a massive market for General Motors. Is that where you see where most of your growth is going to come from?
We are the market share leader in China. But quite frankly, we're seeing similar growth patterns between both the U.S. and China, the 2 largest automotive markets in the world. So, and we have the greatest market share in both markets. So we're indexed into the right markets. We're also doing well in emerging markets like Brazil, Russia, and the Middle East. So it's not all gloom and doom. Our biggest challenges in Europe, as many of our competition are experiencing the same difficulties we are.
A little closer to home, we know that Detroit is going through a financial emergency. What impact is that having on General Motors, and is there anything that you guys can do to fix it?
Well, we try to be a good corporate citizen, but in a perverse sort of way, I think what's happening in Detroit is kind of inevitable, and it's almost healthy, as difficult as it will be, not dissimilar to what General Motors and Chrysler had to go through. The city needs to restructure in order to kind of hit the reset button. And I think the political leadership with Dave Bing, who I think is a great mayor, understands the challenges and are addressing the issues.
Akerson spoke to us from an energy conference in Houston, and he says he expects GM to have 500,000 electric-type vehicles, cars and trucks on the road by 2017.
And coming up, the threat to your cybersecurity. We're going to take a look at who's the most vulnerable to potential hacking. But first, let's take a look at where energy prices and treasuries finished today. Yesterday, Time Warner took the time out of the media conglomerate and announced it is spinning off the world's largest magazine publisher, a place where both Susie and I used to work. And I don't know about you, but I actually like holding a magazine or newspaper when I read one. No knock on tablets, but in an age of smartphones and tablets, can old-fashioned papers and periodicals make money or even survive? John Fort has more now on the future of the printed word.
It's been rough going for print lately. Media companies that once looked at combining newspapers and TV networks as the secret to growth and profitability have lately reversed course. The big new idea? Carve off the print operations and let them fight for survival on their own. That's the plan at News Corp, where Rupert Murdoch plans to separate the publishing business from the TV and movie studios. And now that's the plan at Time Warner, which plans to spin off the iconic Time Inc., home to titles like People, Real Simple, Fortune, Sports Illustrated, and of course, Time Magazine. All of this raises an important question. Can good old printed publications survive in a digital age where people read on tablets and smartphones? Or are independent publishers like Time Inc. simply doomed?
They can survive, but my question is, what are they going to be worth? The industry really needs to figure out how the economics are going to work.
The numbers aren't pretty. Revenue at the Time Inc. unit was down 7% in the last fiscal year to $3.4 billion. It's a similar story at News Corp's publishing unit and at the New York Times Company, where revenues have been stagnant. There are some signs of hope, however. Readers are paying for digital subscriptions at the New York Times, a trend that helped keep the company's revenues from slipping in 2012. Financial publications like the Wall Street Journal and Financial Times also charge for content, and the Oracle of Omaha himself, Warren Buffett, bullish on local newspapers at least.
The local community paper that really is indispensable to the people in the community, or many of the people in the community, and that has a sensible internet strategy, I think has a much better future than the big metropolitan paper.
On the national stage, the biggest danger for print publications these days might be Facebook. Since the social network opened up its ad network last year, it dramatically expanded the supply of digital pages for placing ads and squashed ad prices in the process. And just today, Facebook CEO Mark Zuckerberg pitched the redesigned news feed as a personalized newspaper, something newspapers never quite figured out how to deliver. That means even as these newly independent publishing companies struggle to make the switch to digital, they're going to have to be battling for eyeballs and ad dollars against the titans of tech. For a Nightly Business Report, I'm John Fort.
On Capitol Hill today, the issue of cybersecurity in the spotlight. Homeland Security Secretary Janet Napolitano testifying today at a Senate hearing on the growing threat of web-based government and corporate espionage. Trade secrets, power grids, infrastructure, and even defense systems are all at high risk of being hacked. And security experts warn that another critical part of the U.S. economy is in danger of being overlooked: small businesses. As Scott Cohn explains, no one is immune.
At New York City's Lincoln Center, the focus is on stage. But behind the scenes, a network of computers controls everything. From the website to the escalators, even the electronic signs on the plaza. Chief Technology Officer Robert Tarleton is in charge.
A network that spans 16 acres is very difficult to manage because some of the network is outside, some of it is inside, which means it's open to the public.
Which is why Tarleton spends much of his time dealing with security.
Everybody gets hacked. Anybody that tells you that they haven't been hacked either isn't looking or they're lying to you.
Hackers have never managed to do any damage here, never actually penetrating the network. Tarleton says keeping it that way is no simpler for Lincoln Center than it is for a multinational corporation. Lincoln Center only has about 500 employees, and it's a nonprofit organization. But for a hacker, it would be a rich target. Very rich. Millions of credit card transactions every year. Wealthy patrons donating millions of dollars from their bank accounts. No wonder they take security so seriously. But hackers also look at small businesses as a gateway.
And a hacker can penetrate the systems and applications of a small business that does
business, with the large business, and use that small business to penetrate the larger business.
Why try to hack a big bank directly when you can get in through the ad agency trying to win the bank's business? The question is keeping security officials up at night at businesses big and small. For Nightly Business Report, I'm Scott Cohn.
An important issue, and you know, Tyler, one of the issues of resolving it is that a lot of companies that have been hacked, there's a stigma about saying that you've been hacked.
They're very shy to say that. I was speaking to the chairman of Duke Power not long ago, and he said the one thing that keeps him awake at night above any other is the danger of a risk.
It's a serious problem. Well, that's it for Nightly Business Report, and we want to remind you that this is the time of year your public television station seeks your support.
Have a great night. We'll see you back here tomorrow night.
I'm Susie Garrett with a Nightly Business Report news brief. Encouraging news about jobs helped lift the markets today, fueling another record close for the Dow. Those blue chip stocks rose 33 points, the Nasdaq up 9, and the S&P added nearly 3, and is now just 20 points from its all-time closing high. First-time jobless claims fell by a surprising 7,000 last week. U.S. trade gap grew by 17% in January as the U.S. took in more foreign oil and exported fewer U.S.-made goods. And it took 5.5 years, but soaring stock prices and rising home values helped Americans regain the $16 trillion in household wealth lost during the Great Recession. For more financial news, tune in to Nightly Business Report weeknights on this public television station.